I don't have my clapper here with me, Mark. I apologize. And folks, that gentleman in the other chair is not Pete Najarian. Way too much hair. It is indeed Mark Lopresti. And you may have seen Mark on CNBC, Fox, TD Ameritrade Television. He hosts his own Sirius radio show. And Mark and I are co-investors and into venture evangelism together. So with that said, Mark Lopresti, welcome to the Rebel's Edge.
Thank you, John. Cannot be happier to be here and talking to the incredible Rebel Nation audience that we just had the great pleasure of spending some time with at the incredible Four Seasons Resort in Dallas, Texas, week before last. I loved meeting all of those folks that I had not previously met, and I'm going to apologize in advance if you were expecting Pete. You got a younger, slightly better-looking version, and I did not have enough time to grow a goatee in an homage to Pete. Perhaps for my next guest appearance, John.
Yeah, maybe then, Mark. And by the way, folks, Pete's safe and sound, but apparently because of the damage done to the west coast of Florida, cell towers, Wi-Fi, all of that, as well as electricity and water in short supply. Yeah. So Mark was generous enough with his time to show up, and we certainly hope Pete is having, well, I don't know if you can ever have a good time cleaning up after a hurricane, but Pete's cleaning up and his house is okay from what I hear. Yeah. So let's get started, Mark, with the 1 minute macro. And I wanted to hit interest rates because they just spiked back over 3.8%. This is something Pete and I pay close attention to, and I know you do as well, because you had some comments about one of the folks from the Fed.
Yeah, well, you know, the party that we had in the rally this week, we knew was not to be enjoyed forever. And, of course, Minneapolis Fed President Neel Kashkari making some rather hawkish comments this morning that put a further damper on what looked like some positive indication from the futures before the open. And Kashkari basically saying, look, folks, the Fed's nowhere near getting this inflation situation under control. We have not, and this to me, John, was the biggest tea leaf from Kashkari's comments this morning. We have not reached peak inflation. Hot debate about that. We've been talking about that for months now, and the market reacting accordingly. So thank you to the Fedless Fed. You know, we talk about that term a lot. I am very, shall we say, critical of the Fed's handling of this inflation situation. And we could talk for hours about that, but that's my 30 seconds of fame is up on the 1 minute macro.
That's right. 1 minute macro, folks, because that's all it's worth, even though what Mark had to say there pretty important about Kashkari and the Fed. All right, Mark, let's dive into Pinterest, P-I-N-S. Obviously, if you want to call it a social media, I guess it's also a bit of a place where people put up items for sale. So it's kind of a little bit Twitter, a little bit eBay. This morning, they got an upgrade and shares popped about 5%. I know you're not all that enthused about it, though. Tell me why.
No, I mean, look, you know, I don't always agree with Goldman. This is one of those occasions. This is a company that has historically been struggling, like a lot of social media platforms, to find firm footing as it relates to their business and their revenue model. And yes, John, they have evolved positively to be more of just a post a picture and like and share. A lot of things related to architecture, housewares, art, things of that nature. That's kind of how they've developed their niche. But developing a niche versus developing a very sustainable revenue model where you're translating that into actual e-commerce is tough. And the reason that I don't agree with Goldman's upgrade on this name is very simple. They face incredibly stiff competition from bigger and better funded folks, not other socials, but also the likes of one of our favorite names, Amazon.
Yep, I can't deny that. And, you know, revenue is going to be a big thing no matter who you are, whether it's Twitter in the social space or Meta. Meta's, of course, been hurt as much as anything by their own folly, and Apple. But, yeah, I tend to be with Mark on this one, folks. So I guess we're giving it 2 thumbs down. Now let's jump on, Mark, to Splunk, which is something that is near and dear to your heart because you're a co-founder of Battlefin. Battlefin is a big data conglomeration of 2,000 plus data companies. They do big conferences around the world, folks. That's Battlefin. And Splunk basically is one of those big companies that takes in data and tries to analyze it. And do you have a warm and fuzzy about this one, or are you backing off on this one too, Mark?
No, well, so listen, I cannot agree with UBS's downgrade here, right? And there's been a lot of talk about how mature the data market and the data industry is. This company has got a solid revenue model. They offer their data-related services, which are not just data curation and ingestion, but also with a security wrapper component to it. So it makes a little bit of an interesting twist there. Interesting, by the way, John, Canaccord just a week or so ago reaffirming their position on the stock in the wake of the announcement of the departure of CFO Jason Child from Splunk. We think betting against the explosion of data in the medium, long term, and probably even the short term is a mistake. I'd look to maybe buy some of Splunk as it gets beat up on this downgrade.
Yep, I am of the same feeling, Mark. It's down pretty hard, especially after having a fabulous performance in the first quarter, bled off, and now hovering near those 52-week lows, not right at it, but not too far from it. I'm with you.
Yeah.
So this one, we're giving 2 thumbs up, I guess. I am somebody that also believes that we'll see some speculative paper coming into Splunk near the end of the year here. Okay, Mark. So how about this one? Provention Bio. These guys just did a deal with Sanofi, obviously a significantly larger multi-billion-dollar multinational. And this is for type 1 diabetes. And what the news of this collaboration, I'll call it, has done is drive the stock some 10%, 15%, 20, now 22% so far today to the upside. And it's one of those biotechs, or one of the stocks in general, that's actually up on the year mark. This one's up almost 20% year to date, and still not at the highs of the year, but you know, there's not a lot of stocks that can say that.
No, that's true. Look, I don't have a lot to say about this company. I don't follow it. Certainly type 1 diabetes, type 2 diabetes, huge TAMs, right? Total addressable markets, as we call it. Great news for shareholders in these companies. We tend to get concerned, though, about the biotechs that have all of their fates tied to whether or not they're going to get, phase 1, phase 2, phase 3 approvals, because those tend to be rather binary in their outcomes. But hey, kudos to Provention and to their shareholders making a nice pop, making some good cha-ching today on news of their Sanofi deal.
Yeah, and you got to think, folks, when you look at a stock like this, number one, they've had some success, obviously. The burn rate cannot be too extreme or they wouldn't be where they are.
Yeah.
But they've also got a huge partner in Sanofi that could end up being a buyer. So those are the positives that I see, other than just, like Mark said, some really good first steps with this. All right, Mark. So what about Google? Because they finally came out today with some of the news on their new Pixel phone. I am tempted, because even though I'm an iPhone guy, got my iPhone right here, I have so many friends that do have the Googles and Pixel phones that really love them. It's not that watch put together by the folks that helped create Fitbit.
Well, John, your friends must be in a concentration of people that are buying Google hardware, particularly on the phone side, and I shared a chart with our producers. I don't know if they have the chance to pop it up while we're talking about this name, but Google's market share of smartphone and smart devices is so small that the chart's got to be like this big, and maybe they don't have the ability. Maybe it's just a graphics issue, right? Look, Google on the hardware side has struggled to find brand identity in the same way that Apple, or even come close to the same way that Apple has created that brand identity with its hardware products. When you talk about, you got to bifurcate, by the way, if you're talking about smartphones, smart devices, watches, that's one category. Where Google has done a good job is in the smart home section, right? Nest, Google speakers, devices like that. In those categories, Google's market share tends to start to creep up into the 25% range, right? So this is good news for Google. I don't trade and follow the stock perhaps as much as you or Pete do, so you can talk about price action. But what I'm going to be looking for from Google's CEO during the next earnings call is what they're doing to take this increased investment and this increased expansion of its hardware suite to create that SaaS revenue. We talked about that on another show the other day with the Apple and its new tech day that they did with the new devices that came out. With Amazon. And we're going to be looking to see how those companies translate hardware revenue, which is usually lost leader, for software, that coveted recurring SaaS and e-commerce revenue.
Absolutely right, Mark. And Google's, these are baby steps, even though they own a number of hardware names, to get real traction with a new watch. All I can say about the Pixel 6 and Pixel 7 Pro phones is at least they're going to be in the stores supposedly next week. So they'll be able to compete directly with the Apple iPhone 14 Pro and Pro Max. And they're about $200 or $300 cheaper, I believe, than the Apple products. Yeah. All right, let's do a little unusual activity, Mark. I'm going to start with Teck, T-E-C-K. These guys are copper, they're zinc, and they're energy. You get the idea, natural resource play. And we had big buying of the 28th of October. So right now we're coming up on the first Friday of October tomorrow, which will be 7th. You've got 14th, 21st, 28th. In other words, this is the end of the month, 28th calls that they're buying at the strike price of 35. Now that's about $2.50 above where TECK is trading right now. I like the trade, but especially since it's got just 3 weeks, I'll remind everybody, if you're a stock trader, yes, this is a bullish trade. If you're an options trader like me, you're probably going to want to buy something like an at-the-money call and sell an upside call if that continues in that direction, because that way you can cut down on time decay and risk. As far as you, Mark, I know you have an unusual activity for a stock that's near and dear to your heart.
Yes.
Maybe not so dear, though.
Well, no, shocked is the famous line from my favorite movie, Casablanca, shocked to find gambling or bearish options activity in the dumpster fire that is GameStop, a favorite of the meme tribe. Look, this company cannot get out of its own way. As I said on a lot of different shows, this is the blockbuster of 2022, right? These guys are selling buggy whips. And I actually went into a GameStop store not too long ago with my daughter, and they had half of the store here in New York City dedicated to Japanese anime collectibles. Go figure that one. The video game industry, and I get challenged on that from the meme tribe that love this thing, say, Mark, you don't know what you're talking about. The gamers are avid. They're buying. They're spending money on games. Yes, they are. But where video games are going is away from consoles, away from cartridges and discs. They're going into the smart TVs. They're going to be delivered as SaaS, right? Again, that software as a service, that revenue that the street provides the most generous multiples to. So GameStop, man, I feel bad for anybody that's long. Is there money to be made on the way down? John, you can read the tea leaves on this option activity better than me. Would you put that trade on?
I would, and I did. So that trade, folks, is November puts. And I thought, just as Mark said, that any excuse, I mean, there are 5,800 of these, December 26, 25. That's the strike price, $26.25, basically right at the money puts. I bought those. This is a slower time decay than the previous one we talked about. So I don't have to sell something right away, but I do think, Mark, that you could see a swoon to the downside because of all those factors you just brought up. All right. So this
The only
is where
problem, I want to ask you a question. The only problem with on these meme stocks is if the meme tribe gets a hold of it and they want to run it up on some nonsense rumor, how do you protect against that? That's what scares me with the meme stocks.
Yeah, and that's why I love the put trade rather than shorting the stock, because I know exactly what I can lose if I find my entry with that put. Let me just confirm here. That put was purchased for $5. So if you don't do anything against it, that's all you could lose is that $5. Not if you short the stock at 26.20, you could lose $10, $20, whatever on some sort of crazy melt up in the meme stocks. So Mark's spot on there. All right. Russell Wilson and the Broncos taking on the Colts. This is kind of a battle of two teams that haven't been doing extremely well, Mark. I think the Colts are 1-2-1. One of those rare ties is in there. And the Broncos are 2-2. Russell Wilson, great quarterback that he is, aging as we all do. He's not been able to put the ball in the end zone too often. And that's a problem. Do you think it'll continue to be a problem tonight, or does he finally look like the Russell Wilson that we're used to seeing when he was playing in Seattle?
I think fans would love to see that. I don't see that happening. I think you're going to see more of how they've performed so far this season. So not a terribly exciting game from two teams that have struggled to put anything significant on the board so far this year.
Yeah, I think when they scheduled that game, and that's only, I think, on Amazon. I bet Amazon Prime is not real happy that they got that one. All right, Mark. So I'll go through this one kind of quick. I've got Tampa Bay playing at the Cleveland Guardians. Now, you probably don't even know who the Cleveland Guardians are. They used to be called the Cleveland Indians, folks, but now they're the Guardians. That one's going to be basically right now. It's a noon game, Mark. Who do you take, the Rays or Cleveland?
Well, I had to consult with my specialty football fan and expert, otherwise known as
baseball.
No, baseball. Oh, shit. Okay, sorry. Well, my daughter, who's the sports expert here in the family, says Cleveland over Tampa, but she's not offering me a spread, so I don't know how useful this information is.
All right. Phillies versus Cardinals. Cardinals, you have Pujols, which is one of those 700 home run hitters. And he does play well, I believe, when the games are on the line. This one is a 2 p.m. game today, 2 p.m. Eastern time, I think. I'm going to go with St. Louis Cardinals. Who do you go with here, Mark?
I'd have to go with St. Louis as well, John. It's on my expert opinion.
two thumbs up for the Cardinals. Then we've got the, let's see, who do we have then? Seattle Mariners at 4. They're playing Toronto Blue Jays. These are two teams that I haven't watched at all, Mark. So I'm pretty much saying I guess I'd go with the home team. I'm going to go with Blue Jays.
I'll take the other side of that trade, John. I'll for all of our fans up in Canada, particularly in Toronto, I'll say Toronto is victorious in that one.
All right. So we're both going with the Blue Jays then.
Oh, God. Did I do that again? I did. Yes. Where's Pete Najarian when you need him?
Well, he's down there probably laughing at both of us. Now, final one, Padres. In the reliever, Diaz. I got to go with the Mets here. Stevie Cohen. The Mets are playing at home. I think this is one of the best teams in baseball right now. How do you say, Mark?
Well, being a New Yorker, John, and I actually know which sport and which team we're talking about here. So being a New Yorker, it's very hard for me to go against the home team, the New York Mets, operating, as you point out, in their second year, I believe, under the new ownership of our friend from Point72 fame, hedge fund titan, Steve Cohen. So go Mets.
All right. Well, so there you have it, folks. The Rebel Edge. We appreciate all of you joining us today. I hope that you can send us some love and respond to Mark Lepresti's Twitter handle, which will attach to this. And remember, Rebel Edge comes your way Monday, Tuesdays, and Thursdays, 1 p.m. Eastern Time. Have a great day. I'll be back with 3 at 3 p.m. Eastern Time today.